We have a fantastic session today on nuclear export financing today and tomorrow with Omar Ben Halim, the strategy advisor at the Office of the Chief Executive of the U.S. International Development Finance Corporation. It's quite a mouthful. And then Lindsey Walter, Director of International Policy at the Climate and Energy Program at Third Way. Please, everyone, come on in and grab a seat. Now, before we get started with the conversation about export finance, Lindsey was just telling us that she is a new convert to nuclear, that she used to be opposed to nuclear, but then she had a change of heart. And so she said she would talk to us about why. So Lindsey, briefly tell your conversion story to nuclear.
Very briefly, because you insisted, I was here to talk about financing, but I suppose this is more interesting. I am 4 years recent into the nuclear energy field, and previously I was anti-nuclear, just coming from a Californian environmentalist hippie background. I did my Fulbright in Germany with a bunch of academics that were anti-nuclear, and it wasn't until I started working at Third Way around 5 years ago and was leading our team's energy systems analysis, where we look at what it takes to get to net zero emissions and what the different scenarios are where the math just doesn't line up if you don't have nuclear. So that was the crack in the thinking, and then since then have gotten to know a lot more about the technology and the options, and now I'm a convert. So now I'm talking on a finance export nuclear panel at COP. So you can come around full circle apparently.
Amazing. And Third Way is a sponsor of Net Zero Nuclear. And it's all because of you. So that's wonderful. I want to get started with Omar giving just a brief overview of DFC's mandate in general for those in the audience who don't know, and then specifically what DFC is doing on nuclear and why that's a change from the past.
So the DFC is the US government's new development finance agency. We have a dual mandate to deliver financing to emerging markets, principally in the global south, but also for energy security reasons in Europe. Both for developmental reasons and to fulfill US strategic foreign policy objectives. And one of those key objectives that is at the heart of several different, One of those key objectives that is at the heart of several different threads is climate. And we've managed to scale our climate financing dramatically over the past few years. We're at about $500 million in 2021, and this year that's just passed, we delivered $3.7 billion in climate finance. So that is about 9x, 8x in a little over 2 years, which is very exciting. In terms of nuclear specifically, nuclear is a major priority for us. We're looking to support various, in particular SMR companies in Europe. We've signed numerous letters of interest to provide support and credibility and crowd in momentum and private sector financing, most recently signing an LOI for $1 billion of coverage with GE, Hitachi, and Orlen Synthos in Poland. So nuclear is a priority for us, and we're very excited to be working on it with our partners.
Awesome, thank you. So Lindsey, I want you to first just give a summary of the main conclusions of your new report called Nuclear Export Financing Today and Tomorrow, from which we stole the title for this panel. So just love an overview of that, and then we'll get into some more questions.
Great. I'll try and hit top lines, and then if anything's of interest, folks know where to find me. So we released a report just this past month on nuclear export finance after a workshop that we held in DC with some of the leading thought leaders in this space, and really provided a summary of some of the export financing fixes that we can do in order for the U.S. to become more competitive in the international commercial nuclear energy market. So to summarize the first set of conclusions, a lot of them were focused around EXIM, which is a pretty powerful export credit agency that the U.S. has access to, and one of the largest tools that we have for nuclear export finance. And there's a few things that can be done immediately in order to better leverage this source of funding for our commercial nuclear exports. The very first one is on reshaping the higher level commitment to the cultural practices within EXIM. There is a long history of conservative lending within the EXIM Bank, and this really started back in 2015 when there was a lapse in the charter due to some partisan issues, in the US, which seem to be coming back around. And it led to a period of difficulty for XM where there was no quorum on the board of directors and they couldn't approve any lending over $10 million. So after this history, about 4 years there, of extreme difficulty in lending, there's been this culture of conservative lending at XM. So starting with clear direction and leadership from the board of directors is an important starting place. The second area was on updating policies to modernize the international standards for XM. So right now, the standards that XM are offering are constrained in a way that no other export credit agency is currently observing. Some key examples of this is that XM is still charging commitment fees of 0.5% to sovereign borrowers, which no other export credit agency, I should just use ECA, but I'm trying to avoid using acronyms, no other export credit agency is currently doing, and also requiring a domestic content where the XM will only finance up to the percentage of domestic content in a final product. It is the only ECA that does this. Every other ECA only requires 50% domestic content or less. So for example, the UK is 20% and Canada is 0%. So this was initially intended to make XM more competitive in providing opportunities for US manufacturing and jobs in the US, but actually it has hurt our competitiveness in comparison to countries that have 50% or less domestic content requirements. There's other work that can be done to fix XM, but the two other big ones that I wanted to highlight were there's the China and Transformational Exports Program. We call it CTEP for short. And projects that are eligible for CTEP have lower fees and extended repayment tenors, benefits that make it a lot easier to finance these export projects. But nuclear is unclear whether it is included or not. So a really important fix would be making sure that nuclear is explicitly included in CTEP in order for it to have access to these enhanced financing options. The final thing I want to flag for the XM point is on the default cap rate. So right now, 2% of the total active credit portfolio is all XM has before that can be in default and there is a freeze on the lending cap. No other ECA has this, and we are recommending increasing the default rate cap to 4%. So these are some of the big fixes for XM. I'm not going to get into it, but our report also has some recommendations for DFC, as well as what can be done, not just on the financing side, but on the pre-project work as well. So when we talk about nuclear export financing, that's really at the end of what is a long trail of working up ahead of time, doing capacity building, technical assistance, workforce development, feasibility studies. This is all work that needs to be done on the front end where the U.S. can improve our performance in order to better set us up for international financing.
Fantastic. Thank you so much. So we got an overview, but now a set of questions, and then if people have questions from the audience, feel free to jump in. Give us 1 second so they can get into the meat of it, and then we'll come to it, okay? But so first, I'm going to go out of order because of something that you said. I want to ask, what are the criteria for a good project that the U.S. is likely to finance? So, and what is all the work that you need to do in the pre-finance work? What is that you're talking about? So criteria.
DFC also has this too, but so especially in the pre-project work, if you're a newcomer country, the U.S. isn't just going to sell you a reactor. You have to have a 1, 2, 3 agreement. You have to go through all of these steps ahead of time in order for the U.S. to export nuclear technology. So when we think about the criteria for nuclear exports, it's not just whether or not it is meeting good financial criteria and whether or not it's a fair risk for a financer to take. It's also all of this work making sure a company has its regulatory and licensing body in place. And that's basically what we talk about with pre-criteria work.
In terms of the criteria for a good project, what are you looking for?
So in general, the criteria we look for at DFC at least is we lend only or invest only in private sector projects. So they must be bankable for PPAs, for instance, for independent power producers. We require sovereign guarantees and all the rest of it. Also, as the US government, we have to have very high environmental and social standards because those are some of the values that we hold as a government, and it's also because that is one of our competitive advantages as we work with our partners around the world. One piece that we look at is we very rarely take a lot of technology risk. That's something that with nuclear, we have to take a hard look at, because with the coming wave of nuclear investment that will be required to reach net zero, in particular with emerging technologies such as SMRs, we don't have the ability, and we can talk about this a little bit more later perhaps, we don't have the ability to get the number of reps in that we do with something like solar, where you have physically small technology that you can learn by doing and drive the cost down over time. Even with SMRs, these are much larger facilities, and the inherent technology risk is inescapable. The long-term nature of this means that public finance will be required to get this over the hill. So as we look at what are our criteria with respect to nuclear, we maybe have to be a little bit more flexible than we are in other areas of the energy mix. But that's sort of a high-level overview of what we look for.
Is there a TRL that you really can't go below, or is that how you think about it?
We don't think about it in such specific terms. Generally, we look to see that a specific technology has been deployed at commercial scale multiple times, and also, very importantly, that the specific borrower or client who we're working with has a successful track record.
Got it. I want to raise a macro point here, because you alluded to this, but why is export finance particularly important for nuclear? Sorry, we're hearing from over there some big rumbling. But so why is export finance particularly important for nuclear as opposed to other industries?
I feel like I really jumped to all the solutions before addressing why you
the why is
this.
important.
So, thank you for bringing us back. We know the reasons why the world needs nuclear. We heard at COP the commitment to a tripling of nuclear. And one of the biggest hurdles to nuclear is financing. I work a lot in Europe. We opened an office in Brussels about 2 years ago. And within the European countries, one of the biggest things we hear, if you're able to get past those who just want to talk about waste and security issues, the next one is financing. And so competitive export finance packages are essential if the United States is going to be a player globally, and not just the United States, depending on what other suppliers we're talking about. We are more focused on the US here based on our study. But we need nuclear in order to be competitive in this growing market. And one thing we talk about with our US audience is if the US is not competing, then Russia and China are setting the standards for safety and security and non-proliferation globally. In order for us to be setting those standards, the United States needs to be a player in this field, and that means competitive export financing packages.
Yeah, completely agree. And it's really fundamental because nuclear is fundamental itself. We have nuclear driving power in more than 30 countries around the world. It provides 10% of the global power mix. It provides 25% of the clean power mix. And so as we look to ramp rapidly the volume of clean power that we have, nuclear is inescapable. And therefore what Lindsey alludes to is a critical place for us to play. We can't back away from this area of competition because it's difficult. As we look at energy security, which has been a particularly important question after since the Russian war in Ukraine, we can see that if we're looking to build energy security without gas, without the same degree of fossil fuel mix that we had prior to the crisis, nuclear is something that we're going to need to really double down on, and therefore providing that set of standards, providing that financing backing is going to be critical.
We had this question in the audience, so let me go take that right now, and then we'll come back to this. So,
this is not a criticism of what you do. I think you're doing a wonderful job. But looking at the bigger picture, we're supposed to meet this 2050 goal, which means to electrify all our economies, in a little over 2 decades. The question I have: is there enough capital in the world to be able to finance that?
Is there enough capital in the world to finance what we need to accomplish? Let's try to limit that a little bit to nuclear, which we've said is we need to triple nuclear capacity by 2050. Is there enough capital in the world to get us there?
Look, yes. I think that capital chases profits, it chases revenue, and is generative. So as we can build business cases around this, as we can prove that there's a profitable opportunity here, capital will be attracted to this sector and to the broader energy transition in general. And that is the role of public finance, to leverage the private sector and to prove to the private sector that this is an opportunity, not a cost, not something that we must do, to de-risk the sector and to provide sort of various tools in order to bring the private sector in. And this is something where DFC's range of tools is particularly useful, because we have direct equity investments, we have loans that we can provide, but where there are deeper capital markets, especially in geographies like Europe, or those with increasingly strong capital markets like India, we can provide guarantees, we can provide political risk insurance that crowds in private sector capital without replacing it. And so I think the answer is yes, and we have to be very thoughtful about how we scale and sequence the tools that we use as the technology becomes increasingly mature and as the risk falls.
I think Omar covers the is there enough capital question. I would also raise, I mentioned that I converted to nuclear energy doing our energy systems analysis work, and we did a study in Europe at the EU level looking at pathways to get to net zero, and those that exclude nuclear versus those that include nuclear cost 80 billion euros more a year by 2050. So there's this question of do we have the upfront capital, and I think that's an important one, keeping in mind that as we get better at building these things and as we're able to get further down the innovation chain, they'll be cheaper. But there's also a broader question of the cost of the transition and where nuclear energy can help with broader systems costs.
We've got another question right here. Oh.
Hi, Marco Margheri with E&I. Thank you for making this into a great conversation in a spectacularly nuclear COP. So, bravo. One question based on Liz's points for both of you and for Omar. You mentioned that something needs to prepare the export procedure in terms of analysis, and today and right now you mentioned the system analysis. So my question is, how is the process structured, or should be structured, in two ways? First, a stakeholder assessment of how, in which type of ESG playground nuclear comes when it lands in the country of export. And second, you mentioned system analysis. If I take the experience of Europe, Denmark is very different than Italy. We're a manufacturing economy. They're less. They're more offshore wind, and they're smaller. They have a smaller density, etc. So how does the system analysis factor in the U.S. decision to export, or if it does at all? Thank you.
Do you want me to take this one? So there's a couple different departments and agencies involved in the U.S. that are part of these kind of pre-projects works. There's the State Department, which has been doing a lot of work in preparing capacity building for newcomer countries in particular. They recently established FIRST, which is the Foundational Infrastructure for Responsible Use of SMR Technology, and the whole role of this program is to engage with newcomer countries and do capacity building. And they've also introduced Project Phoenix, which is looking at opportunities to convert coal to nuclear. They're doing this with feasibility studies, with analyses on regulatory readiness, and on also providing advisory services. So the State Department is just one department within the U.S. government involved in this sort of pre-work. There's also the USTDA, the Trade and Development Agency, that will do feed studies. They did this in Romania, for example, with RoPower. They provided a grant for their feed study for the first SMR plant back in 2022 for Romania. And then there's also the NRC, that our Nuclear Regulatory Commission, that does work on establishing regulatory and licensing in newcomer countries as well. So I think if anything, there's maybe a need to streamline this work across agencies, but there's a lot of steps that you have to go through if you're going to export a nuclear reactor in the United States. I think it's something like 6 different agencies and programs at minimum involved in the process.
We got another question over here.
So I think both the DFC and the EXIM recently changed the rules to allow financing of nuclear abroad. I have 2 questions. Have you financed any nuclear projects to date? And what does the financing look like today, for example, for Poland? Because I know they want like 30% co-financing to go ahead with their project, which is an issue with the Westinghouse AP1000 offer.
Great question.
That's you.
So we haven't financed nuclear to date. We have been engaged with multiple projects in Romania, in Poland, and further afield as well as South Africa, in order to try and build momentum behind those projects, and we stand ready to finance those projects as and when they come to financial close. I didn't catch the second part of your question. So.
Status of the financing for Poland.
So the status of the financing for Poland, Orlen Synthos, GE Hitachi are still working through that project. It just received some initial approvals, I believe, but they're still working through that project. And as it comes to FID, we will continue to work them through our process to provide financing.
Got it. Excuse me. Any other questions from the audience? Okay. Then I want to go back to the conversation we were planning to have. The questions from the audience were much better, but I want to talk about the international export finance market and if the U.S. is competitive. You were talking about some of the issues that the U.S. export finance has, but when you look at the broad scope of export finance opportunities, how does the U.S. stack up?
We have some real competition. The honest truth is that Russia and China will provide 85% debt financing and meet the rest of the 15% with equity, which the United States doesn't really do, which XM can't do. DFC has some tools for equity financing, which could probably be improved. But there is work that can be done to compete with the financing packages that Russia and China are putting forward. One thing that's important to keep in mind is a lot of the countries that we're engaging with aren't looking for a one-for-one match for what Russia and China are providing. They are very well aware of how happy these countries are to use nuclear energy as a geopolitical tool. So thinking that the United States has to perfectly match these financing packages, I think is foolish. We're not going to. We have a different market. We have private companies involved. We're not state-owned enterprises. But there is work that the United States can do to put the weight of our government and the patient capital of our government behind our projects and leverage private sector capital. So it depends on your definition of competitive, but a lot of folks want nuclear energy from the United States. So we just need enough to allow them to build it and to provide that secure background. It doesn't have to be a 100% financing package. That's not what they're looking for.
You want to?
Yeah. I won't speak to XM in particular, but to this point, the general point that Lindsey makes, everywhere we go, everywhere we travel, we frequently come across allies and partners who have a range of options in who they go to for financing, in who they go to for technology, in where they source their supplies. And there is a very broad and deep understanding of the value of the diversification of the supply chains, both from a cost point of view, from a security point of view, from a technology risk point of view. And so just to underscore that point, that is absolutely what we experience and what we see in the market.
Got it. Now, we've been talking a lot about the U.S. and U.S. export finance, but are there ways for the U.S. to work with its allies and partners to make a more competitive offering? Is there something that we can do that is international in terms of the financing?
Well, I think that's a must, not a can do. The scale of these projects requires multiple different parties to come to the table. And again, SMRs are really where DFC is looking as an initial point of engagement. We have an upper limit of $1 billion on the scale of financing or political risk insurance that we can provide, which really limits our ability to be tangibly, we're best suited to providing financing to SMRs. Even within that case, we require many parties to come around the table. The regulatory environment that you described, the places where the technology comes from, all require various different expertise from different partners in Japan, in Korea, in Europe, to come around the table. So it's really something that we have been cooperating with broadly, and we'll need to continue to do as we move forward.
Can I add to that? So 2 quick things. One is there is a proposal out there for an international bank for nuclear infrastructure, which would bring together financing from a handful of different countries, including the US, Canada, Japan, UK. And this would be a great way to leverage what we talked about earlier, that patient public capital in order to leverage private sector capital. So there's more that could be done in setting up some sort of international infrastructure bank that's intentionally collaborating on nuclear energy projects. And then the second thing I'll say is another wonky XM fix. I'm realizing that most of my talking points read way better than they work in like a panel speaking platform because they're so nerdy, but the other minor XM fix here is that if we were to co-finance or co-finance a project with a different country, XM has to account for 100% of the financing and the risk for that project. So another small fix is if you could separate and require Exim to only account for the portion of financing that it's responsible for. That would also help unlock more Exim capital.
We've got a question right here.
Hi, I came in halfway through the panel, so I apologize. This has been covered, but I've been hearing about a project right now in Poland, and the new administration has come in and demanded that Westinghouse, which is on track to build a 3-reactor plant in northern Poland, to put up 30% skin in the game, to take a 30% stake in the project. Westinghouse is a private company. It's not in a position to do that. It's got a market cap of like $9 billion, and so it doesn't have the firepower. Do you have any information or any ideas on how the U.S. can facilitate a relationship like that? And I do believe Poland is one of those countries that's very eager to work with the U.S. if possible.
So you're making a very important point, and actually there was a lot of talk and ask from the Poland government for the United States to help with some sort of equity financing. They were asking for kind of a modest $25 million in equity financing coming from the United States and partners as a good faith effort to show the U.S. is not only committed to this project, but is committed to longer term bilateral engagement in Poland around nuclear energy. So there is more that the government can do to put its backing behind these projects and support the private capital. I do think the U.S. has put, I forget if it's 23 or 28 million in different financing packages towards Poland already. So I don't know exactly the specifics of the portion that you're talking about, but that is where the U.S. government can step in and make sure that there is adequate public support and public guarantee for the project in Poland for the AP1000, and also looking at the future SMRs. Poland has an ambitious goal to build, I think, 80 SMRs by 2035, so there'll be a lot of work that needs to be done there on the financing aspect as well.
Got another question right over here.
Yeah, for Lindsey, you mentioned setting up a special entity to facilitate nuclear financing. There are already lots of financial institutions, World Bank, etc., that won't finance nuclear today. Isn't it easier to work to get them to help finance nuclear projects than to set up a new entity just for this purpose?
I'll do it. Okay.
I'll editorialize a little bit
Yeah,
on
Randy,
this one too.
like, you correct what I say when I say it wrong. Potentially, but we haven't seen a lot of progress on that front. The other thing that we have seen, even with DFC, which has a history of not allowing nuclear and only recently has allowed it, there's a real issue with nuclear expertise and experience within these financing agencies. And so having one that is dedicated to nuclear energy, that understands the industry, understand what it takes to finance and build these projects, is really important. And we're just not seeing that happen with these larger infrastructure banks that already exist. So nuclear is a special technology. What's required and the knowledge and expertise and history to build nuclear is quite different. So if you could get them to change, maybe. Randy,
I just want to
editorialize
make
it.
a comment on the politics, which is that one of the biggest, if arguably the most important announcement that's come from the COP so far is the AAA nuclear declaration, and it's important to note that that was not part of the sort of main COP set of announcements, and the politics have a role in that. And so if you can't get something like that as part of the main COP declaration, just imagine trying to work through another big bureaucracy like the World Bank. The politics would be very, very challenging. So I'd like to see it, but I think we need to. The discussion in the previous panel about Germany, they need to change the tone in Germany before we'll be able to change the tone at the World Bank. We've got one more question, and then we're going to wrap this up.
A quick comment and a question, because on the International Bank for Nuclear Infrastructure, the difference is we're happy if World Bank offers, but World Bank mission is poverty eradication. It's to loan only to poor countries. This would be an infrastructure bank, so it could loan to Poland and other rich countries. But the real question is, on export credits, you're still limited by the OECD consensus rules and special sectoral understanding. That really means that all Western OECD export credit agencies are limited to offering the same, right? They can't compete. So.
Great. Well, thank you all. I want to just see, are there any final comments from Omar or Lindsey?
I don't think so. I think that this is an absolute priority for the Biden administration. It's something that we're very excited to get behind and bring our range of tools to bear on. It's something that is going to take time and repetitions, and we cannot expect instant successes in all of our first projects. But as we start to build muscle memory and expertise, both on the financing side as well as on the deployment side of SMRs, this crucial hole in our future energy mix will begin to be filled. So this is enormously exciting, I think, for all of us.
I'll conclude by saying there's some fixes that could happen right now that are easy to do, easy to make, and those are in the report. I mentioned a few today. And there's those that might require a little bit more work, like changing statutory pieces of things, and that's going to require congressional action. That might be a bit of a longer road. But if you if you put the two together, we can put together competitive financing packages. And if you have questions and want to read the report that we put on Third Way's website, please come up and speak with me, and I'm happy to send you in the right direction.
Wonderful. Thank you all so much for joining. And thank you, Omar and Lindsey. Really appreciate the time. And I want you all to stick around for our next session, which is at 4 o'clock. And it's another finance theme, given it's Finance Day. Accelerating climate financing for nuclear innovation, ETFs, portfolio investment, and climate bonds. So thank you again, and thank you all.